Hey guys, how's it going today? So, today's video, as you might have guessed by the title, is about ETFs or exchange traded funds. So, the first thing you might be wondering if you're not familiar with these is what is an ETF? What is an exchange traded fund? So, it's a marketable security, which basically means it's an instrument like a stock that's highly liquid. Easily it can be converted to cash, instantly almost within seconds. And it's an instrument that just trades just like a stock. However, it can mimic a index. It can mimic a fund, a sector. It can almost mimic anything. You can have ETFs that track oil, ETFs that track almost anything you can almost kind of conceive of at this time, except for Bitcoin. Um, so it's a very, very powerful instrument, and it is something that is relatively new, but is something that if you were aware of, could completely change your investing career. It could completely change your life, really, in some respects, because the power of these ETFs now allow an individual investor to basically track the market with precision. And when I say the market, I'm talking about like a market index. If you're not sure what that is, watch one of my other videos on that. I explain that quite a bit. So when you think about that now, it really changes a lot of concepts that we kind of hold dear in our lives. One that comes to mind is the housing market. So basically, what a lot of people don't know, I'm not going to go into this, in particular on this video, but I'm definitely going to make a video on this in the future, is that if you can track a market like the S&P 500 or the Dow so precisely, on average, like I've mentioned in one of my other videos, you're going to see 10% a year on average. And if you have a lot of money in the market already, and say you're renting and you have a lot of expendable cash because you're renting above your rent, to throw into the ETF, you can destroy the returns that you would have on housing market, depending on how much your rent is, depending on how much the housing market on average goes up per year where you live, of course, right? So anyway, let's get into this really quick here. So this is an example of one I just wanted to show you guys. So this is the spider, as they call them, right? So they have a lot of different funds. So basically, I explained what an ETF was. Now this is an example, and different investment firms that I'm going to show you at the end have a whole bunch of ETFs. Blackrock has them. This is the Spider's website here. But let's go back to the Spider, the S&P 500 one. So this one tracks the S&P 500. And the question is, how accurately does it track the S&P 500 and how much fees, right? Because quite often people would put their money into a mutual fund, but the mutual fund fees are pretty enormous in a lot of cases, and they're usually benchmarked against different things. Mutual funds can be benchmarked against the market, say, but a high-risk mutual fund might only get you 6-8% a year, and that's a high risk, right? Whereas this is the absolute lowest, because this is the market as a whole, right? And you're looking at 10% a year or so. I figured being in the new year, this was a good time to look at this. Let's look at the date range here. I have it from January 9th, 2017 to January 8th, 2018. And as we know, we had an amazing year. I said on average the market's gained about 10%. Well, this year we were 20.56%, and that's excluding dividends, right? We have dividends involved in that as well. So I made a little spreadsheet here. This is the exchange traded fund, right? So I have that. If we go back here, look really quick here, 20.56 here, see that? I have that 20.56, but I've also added the yield, which is 1.7%. So if you own this ETF, you also get, that's what's so powerful about them, the 1.77% dividend, because the S&P 500 has 500 of the largest companies, which pay a dividend, and the ETF passes that through as well, right? Here is the actual S&P 500 index. This is the actual index. As you can see, it went up 20.65%. So 20.65 versus 20.56. That's how small the fees are, right? So I just put it in here. I put the exact same thing here, 20.65 plus the dividend yield that you would have got if you could own the whole index there. And that's a difference of only 0.09%. That's not 9% either, that's 0.09%. So say you had $100,000 invested here. Your ETF this year, you would have made $22,330. So this is the power. Like I'm saying, if you have $100,000 or more in the market, look what you're going to gain. But this was an exceptional year because of the exuberance around tax reform and such. The index had 22,400. So you're looking at a difference of $90. So $90 on $100,000 is basically the fees that the ETF is taking. So basically, the spider, the S&P 500, is taking $90 from you to do that wonderful thing. That's amazing, guys. Absolutely amazing. So likewise, here is the Dow Jones. The spider has one on the Dow Jones, and the Dow Jones went up even more this year. We saw a 26.61% gain. Holy man, right? And here is the actual Dow Jones, 26.88. Look how close those are, right? So the funds are really not charging much at all, right? So I'm going to show you this as well, just to give you guys an idea of the many different things. What's so powerful about them is you can track almost anything with an ETF, but you can also short, right? So this is the Pro Shares. This is another company that does them, Pro Shares, ultra short, and this is shorting the S&P 500. Now, disclaimer with this one, this corresponds to 200%, so twice, or 200% rather, the opposite of what happens daily, right? So say you went up 1%, you're going to see 200% down, right? So it's just inverse, or inverse meaning the complete opposite. If the market goes up, you're going to lose money that day. If the market goes down, you're going to make money, right? So this is something very powerful if you think, especially markets being as high as they are right now, that the stock market's going to go down. You'd want to get involved in this. Not going to get into the particulars of this, but these can be very dangerous if they're leveraged. That's what it means, leverage, 200%. There's ones that are 1 for 1. This one's 2, right? Not going to get into it unless you guys want to make me a video, want me to make a video on it. But because these are rebalanced daily, meaning the funds basically have to rebalance or redo the portfolio every day, there's a result that is slippage. And basically what that means is if the Dow Jones is pretty steady for quite a long period of time, it goes up and down a little bit, up and down, but not too much. Even though the market really isn't changing, you're going to end up losing money, as counterintuitive as that sounds, because it's leveraged and that rebalancing. So the best case scenario owning something like this is for it to continually go down or continue to go up, depending if you're going short or long, right? And then you're not going to have that slippage. So to give you an example, this is, like I said, the S&P 500. You saw a loss in the same time period. I can show you here. I have 33.26%. That's a lot more than the market went up this year, right? Inverse, because this is twice as much. And depending on how turbulent it was, like I said, if it was more steady, you might have seen this, you might have seen it erode even more. Hopefully that makes sense to you guys. Here's one, the Dow Jones. The Dow Jones went up even more this year, and as you can see here, look, it went down 40% this year. So if you were trying to short this, and this one's leveraged as well, I think 200%, yes, you would have lost 40% on your money. So that's the dangers of these, right? But I just wanted to show these to you guys as an example to show you can get an ETF on almost anything, right? So this is the Spider company. I really haven't looked through this too much, but you can go to their websites and you can look at all the different things. They have emerging markets. That's the one I showed you right there, the SPY, the S&P 500, loans, gold, all these different things. And so that's what makes these extremely powerful. Here's Blackrock, another one. They kind of have an intuitive website here. So up here you can go, well, I want just US and I want equity. So then you can see all the things they have here. They got the Russell, which is another stock market index. They've got everything. They got one dividend ones. They have you can see the list here, and then you can click off that and you can look down, and there's got to be hundreds here, right? What I don't see, actually, they might not have one on commodities. It says 0 here. We have 5 here. Let's take a look. So there's gold, silver. So basically, I've even used these in the past, especially when we saw that turbulent oil market, to short the oil market and to go long the oil market. And it's an easy way to do it without having a margin account, which means you basically have to use derivatives or options to do it. And it's a good way to make money, but it's risky, especially if they're leveraged, like I said, right? But that's going a little bit beyond what I wanted to talk about today. I just wanted to talk about the power of these things and how you could sit here and do nothing and basically beat the majority of investors, because it's really difficult to beat the market, if not impossible, some people say, consistently on a long-term basis. At least all the studies have indicated that. So that's why I've actually seen some of the, the most great investors of all time, even I believe even Warren Buffett has said, park your money into they call them index funds, or ETFs are essentially the same thing. And for the majority of investors, that's the best thing you can do, because if you're picking your own stocks, it's quite difficult. You could beat this return, but that's quite an amazing return. Anyway, that's all I've got for you guys today. If you have any questions about any of this, feel free to comment down below. Don't forget to like this, subscribe, hit that notification button. And I'd love to hear any thoughts you guys have on this, or even any questions that you got. Have a great day, guys, and I'll see you in the next one.